Let's talk about a stock before we go that has not gotten much benefit, if any, from AI, Adobe. Throw it up, chart of the day. Because they're tumbling today. The guidance was disappointing. It's the worst day since March. 5 price target cuts, a downgrade. You own it. Look at that. That's 12.5%. If you lengthen out the chart,
do I have to look at that?
If you show me a year to date as well, which tells a better story than that one, you'll see what I'm talking about, because it's like this.
This happens once a year. Do they need leadership change?
Well, okay, that's actually a great question, because people who are on the call will say, look, this is boring. There's nothing exciting. It's not like when you talk to some of the tech leaders and you come off of those calls like, Mark Benioff, and you're like, charged up, all right? Mark Benioff says whatever the agent, I'm not in the stock, you know what it is. And like the stock goes nuts the next day. You get off Adobe's call and you're like, what do I do
What's
here?
their answer to Sora and all of these things that seem like they're going to eat their lunch?
So I don't think anything's going to eat their lunch. I mean, we can have a debate about that. I think we would all agree we use Adobe. I think their Firefly product is showing a lot of growth. And look, their annualized recurring revenue is up just north of 10%. I really think this is overdone. But I think the point that it's a boring stock really looms large here. Now, let's just talk about it. At the midpoint of the guidance that they gave, and Scott, you're right, the headlines are disappointing guidance. I'm going to put perspective on it. It's less than 1% below where the estimates were. So I'm trying to, does that merit a 13, 12% drop?
But I put perspective on it, which I think is more important when you give me a year to date again, please.
Look, it is what it is.
Right there. So you go to the top of that move at the beginning of the year to like this, culminating to where we are today, when every other AI-related heavyweight is like this.
Yeah, Scott, I hear you. I mean, you're speaking facts, and it's pretty frustrating for me. But what does give me comfort, and this is where Jenny might come in, I don't know, but this is now trading below 24 times earnings. So I told you a minute ago that I was trimming Microsoft at 35 times earnings. You know which one has a better projected growth rate going forward? It's Adobe. But nobody cares because it's like, it's Adobe. I got it. And Josh, you made a point earlier, the big are going to get bigger as flows come into the market. I think this is what you're saying about passive ETFs. That's not going to go to Adobe. I will say this. I'm not adding to it right now for very simple reasons. There's just no catalysts for here. But I am going to hang on to it. But I am going to hang on. I am going to hang on to it because, really, to Josh's point, I don't think anybody's going to come in and eat their lunch. Maybe I'm wrong. I just don't see that. I mean, Adobe's everywhere. Let them grow. 10,
but I think
11%.
the reason for that multiple in a market where software stocks have been rallying furiously is that there are legitimate concerns that some of these new AI visual tools are going to enable people to work around the Adobe ecosystem that's so core to the creator economy. If there are ways around that now being created, and Adobe doesn't have like this kind of electrifying presentation about their answer, maybe it's time for somebody else to be in the seat.
I'll dance with the. I want to say one more thing. I'm sorry, but this is a stock that has surprised to the upside on earnings 20 quarters in a row. This is what they do, and it bothers me. Okay, they guide below, again, less than 1% versus expectations, and then they exceed it. I really wish they'd stop it. And Josh, you're making a fabulous point. Maybe it is time for management change. All that said, I'm comfortable holding it at now 23.5 times forward earnings.
All right. Okay. Last point. Go ahead.
Okay, but maybe it's not that they actually need management, and maybe this goes back to me saying FOMO, right? There is a group of stocks out there that just have like zhuzh factor that people just like owning, and they like talking about.
Yiddish now, I like it.
I thought I was speaking like hipster.
I like it.
But here's the thing: like, if you were just to take the numbers on Apple and Adobe on paper, right? 24 times, they both have a 9-10% earnings growth. Like, Adobe is more attractive, but nobody cares because it doesn't have that like cachet. No one wants to talk about it. And there's something that's kind of broken out there, both in the stock market, and I've heard, I read an interesting thing the other day about politics, where once you turn these things into entertainment, right, you start personifying companies or politicians or whatever it is. And if we've personified these companies, then there's a lack of objectivity. And the objectivity would tell you Adobe is the better buy.
You want to play?
Yeah, no, I mean, I think it's an interesting conversation. That, like the part for me that I take in consideration is as an example, what's going on with software versus the semiconductor industry, right?
What's your favorite software stock? Because it's not this
ServiceNow, right? Because I think when we came into this year, it was all about where the CapEx was going. Right, and the idea was that the CapEx in the software industry was going to slow, and that hasn't happened. instead, we've talked about a lot of the CapEx from the hyperscalers and what they're spending. Now we're talking about profitability and use cases. And that's why companies like ServiceNow and other software names that are really here to play.
Run that stock has had this year. ServiceNow, incredible.
Yeah.
Yeah, I think when it's very easy to look at this multiple is lower than that multiple.
Right.
The harder part is why and will it persist? Why and will it persist? I'm not saying I have the definitive answer, but at least identifying why don't people care that Adobe keeps beating earnings? Why are they selling it off when it barely misses? I think it has nothing to do with the earnings. I think it's concern about future earnings being impaired by a competitive disadvantage. If that market narrative proves to be wrong, there's a lot of money to be made.
Hold on. Not to put you on the spot, Jay, but I want to go back to that ServiceNow chart. I don't have this off the top of my head, so forgive me, and I don't mean to, make you come up with an answer if you don't know off the top of your head either. What happened in looks like the beginning of the summer where this stock took off? Was it our earnings report that set this thing off on fire? Look where it was.
Earnings have been
summer.
Yeah.
Let me help you. Just say AI. So much easier.
No, and that 100%. But earnings have been solid. Bill McDermott has done a number of partnerships that have obviously continue to drive the stock. And I think it's about use cases. I think workflows everyone's trying to figure out how to optimize my business. And I think ServiceNow plays very well into that space.
All right, good stuff.